Good morning, everyone. How's everybody doing? Hey, Elliot, how are you? Slow day. Don't forget we have to do a call today. Apologies about yesterday. They were doing construction, and I'm surprised we got our actually got to record the sessions. They were doing construction outside, and they cut the power line a couple of times. A bit of a messy business. Well, what are we going to do today? What are we going to do today? Overnight inventory. Let's start with that. Overnight inventory is now officially short as the point of control volume wise and time wise. I'm not sure about, time wise of underneath yesterday's close. So, on the overall grand scheme of things, what I'm looking for are these lows to hold. So, the low of yesterday and the low of day before. Now, this is the first time in a while since we've had this kind of a low and then a higher low. Let's see what happens today. This market is in what we call price discovery. Okay. And price discovery means it's trying to find that area where they don't have to sell any lower, right? We've had margin call selling, we've had people, right? And we've been discussing in this micro E futures room for years now. I was posting articles in, I think it was 2021, about how people borrow money from their stock portfolio so they don't incur capital gains from selling their investments. Well, when the price of certain things drops as people borrow more, they get margin calls. Those margin calls create more margin calls because you keep taking lows and lows and lows. So the market has been in trend down now for quite some time, right? Because of macroeconomic changes, et cetera, right? We had a look above and fail of 61.15, and then it got really heavy around 59.50 and just straight down, right? Not panic selling, but it's been orderly, but still, explain to somebody that orderly selling is okay when they're long at 59.50 and it's trading 56.80. It's not very comforting, right? So what we're doing now is we're looking to see this 55.84 is a big level for me. It is, these are the levels from 2020 that I came up with. And what I'm trying to do is I'm trying to just trying to understand if we are going to accept above it or below it. Right now we're below 55.84, right? And so for us as retail traders, now I understand we have people in our room who trade larger amounts and things like that. And for them, I would say I would go position long only if we get over 56.20. Once we establish some sideways, chop on a longer daytime frame, because the thing is, not everybody who's trapped up here sells at the same time. And that's why the market just has been drifting lower and lower and lower and lower. So we need to find a bid. We need to find an area where buyers come in, where they think it's a good idea to start putting positions together. That's hard to do when the macro keeps changing with tariffs and things like that. So that is understandable. So what do we do in the meantime? Well, for traders who are just starting out, it's a great time to learn. For traders who like to swing trade and have gotten kind of killed on the swing trades because of the constant selling, right? And aren't really good at shorting or shorting the bottom accidentally. Well, how about do some shorter term trading to make some money while you wait for the market to find its bottom, right? There's always opportunity. Now, I understand a lot of people don't like short-term trading. A lot of day trading has got a really bad reputation. I remember, in the 90s when day trading started becoming popular, it was just fiendish behavior. Nobody knew anything about money management, risk, any of that stuff. People would just get in there and go nuts and lose all their money. Not much has changed. Despite all the information out there on how to manage risk, um, people are still doing that. So we have to find a way for our friends to manage risk, right? And that way is the look below and fail, the look above and fail. Those two trades are fundamental trades. And I promise you that if you practice them, you will see results. Now, that overnight point of control was up here at 56.06 half, and now it is dropped down to 55.82 half. That means we've got good accumulation going on. Okay. My balance zones this morning are 55.76 and three quarter to 55.84 half. Okay. And you can see that the look above and fail here has been pretty nice. We looked above and failed. Now, how did I find this balance zone? It's the same thing we do every day, right? We look for a high and a low, and when we look below that high, that low, we go right back to that high, right? That's two-sided trade, and it shows where there is a position. Then this is the discount zone. This is the profit zone. VWAP is up here at 55.91. So now overnight inventory is short. Let's see where we put in the low before London opens here. Margins are elevated tonight. So we have higher than average margin rates at a lot of the brokerage firms. Okay. So I haven't taken a trade. I just took my thing off sim. So I use sim like a safety on a gun. So when I'm moving the DOM around and stuff like that, I because I have actually clicked into a trade when I was moving my DOM once. Not a pleasant, not pleasant. Lost a couple of points. Thank God I was on the micro. So as you can see, any kind of a large sell order is taking this market down quite a bit, right? So we've moved down. So when you start trading, right, we have the 5 steps. What do you do every day, right? You go and look at where the inventory is. You assess what's going on in the business world, right? That's indecision. Okay. So if you're a buy the dip, look below and fail trader, you know that your trades are not going to be as good as they were in an uptrending market. So you might trade less, you might trade smaller. If you're a short seller, you're looking to sell into those rips. There are some single prints here too, my friend. You're right. There's single prints here and they're here and here. So there is supply, right? There is supply above us. right? And it makes sense that there's supply because there's supply above us from September of last year. So it's going to take some time, right? So the trades we like to take are the look below and fail of 76 and three quarter to 84, the look above and fail of 84 and a half, back down to 76 and three quarter. This was a little tough, but at least you could have scored a few points if you were short 83 down to 80, 79. And of course, if you are in a trade, a lot of people ask, how do you monitor for continuation? Well, the way I monitor for continuation is that I put orders in the system. Okay. So if I was short, say I was short 76, 75 against the top of these candles here, because that's where they started to sell into it, right? You could see the seller was, right? The seller was here, then they moved here, 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 right? So that's sellers competing that pushes price down. So say I was short 76 against the top of these candles here at 77, right? Because if I lose the seller, the trade doesn't make any sense financially. So if I was short 76 and the market got down to this area here at 72, I'd put some 72 buy orders in and clip 3 or 4 points, right? The ranges are big enough tonight that you can make a living, right? You just have to use your setup. This is when you lean on your setup. And if your setup stops working, then something has changed, right? If you're like I posted earlier in the room, right? We were talking about timing, right? And what I wrote was with the change in the markets, it has created larger than normal 1 minute candles. If we are early to a trade, it can hurt us, and the timing is hard to get exactly right, as the order flow is not as reliable as consistent, right? Because the market's in price exploration mode. When this happens, the order flow is unpredictable. Not every trader will be able to adapt quickly. And even the ones that do can still get the timing wrong, as any one large order can take us out of a trade very easily. This is a market condition that we have to weather, just like a sailor has to weather a storm, right? This will pass. And once the market has digested all the macro, we'll get back to a more suitable business environment for retail. Okay. Since we have zero control over order flow and we're basically scavenging for trades, we've got to be smart, pick our spots where the business lines up with the way we do business, right? Always use stops because that one stray order can take us out. And remember, this is a phase in a business cycle that we must survive so we can thrive when the cycle changes. There are times in business when you're in survival mode, and there's a time when you're thriving, right? So when a market is doing what it's doing right now, I have no interest in trying to pick the bottom. I'll let the market do that for me. Okay? Let the market find the bottom. If I'm not short, I've missed the trade. That's okay, right? There's nothing wrong with missing the trade, right? I'm just settling into my day. I didn't get to trade yesterday because the power kept getting cut off to our city block because they were doing construction, which was kind of a pain. So I'm a little rusty. I always approach trading with caution. And there's a reason why I'm cautious. I'll talk a little bit about that while we're waiting for this thing to find a bottom. Right. So if you're short from that continuation of selling after 76 and three quarter, you can see that they're finding some bids here right now at 69. But say you're short 10 contracts at 76, 75, 74 and a half, and you're covering, I would cover at least half of them down here. Right? That's why I use those zones. I'd use that 69.70 to do some covering, because you can see on these three candles, you can see that the bid is starting to move up to follow the offer. But there's going to be a seller right here at 72. Right? Very simple way to look and see if there's a seller. Just look to the left. The top of that candle is where the seller initiated. The top of this candle and that candle are where the sellers initiated and pushed price lower. Why did they do that? Because they were running out of buyers and they were competing, right? Competing to capture the buying is a concept that retail traders are never familiar with because they've never traded size, right? It should be 6 seconds, Dave. The delay shouldn't be 1.5 minutes. Is anybody else finding the delay longer than 6 or 7 seconds? Is anybody in the room today? Okay, Elliot's is 3 seconds. So Dave, your internet might be a little off. Because Elliot's in Vietnam, and if he's only got a 3 second lag, that's pretty good. See how there's a seller at 72? Thanks, Grind. So what's going on now? The short sellers are coming in at that 69, 70 level, and they're covering. Wholesale's building a little position on top of them, right? And if we get enough price stability, we'll be able to lift prices up to 73, right? But that offer right now, if you watch, I know it's slow right now, but it's a great time to learn. Watch the red line and watch this line, right? Maybe I'll make the line white, okay? So when the red line gets above the white line, it means that the sellers, the wholesalers, have seen buying. But right now, when they get up there, somebody steps in and sells. See? But if they can raise the offer and get people to follow and print, there you go. Now we've cleaned out the 72s, right? In old trading, you would hear, okay, let's clean out the 71s, buy everything there, and then sell it up here at 73, 74. Okay? So now, right to that standard deviation, there should be a seller there. And if we get past that, the next place you're looking for a seller is right there at 76. Right? So one large buy order can take a market from 71 to 76, 77 pretty damn quick, right? Pretty darn quick. Look above and fail of 76 and three quarter. So if you shorted 76, right? If you're short here, you're going to use 76 and three quarter as your stop. And you'll look for bids at 73, 74 just to see if the sellers compete, right? So I shorted 75 and a quarter. I got a 74 and a quarter bid in, filled at 74 and a quarter. Okay. That's just a test trade to see whether or not my reflexes are working. And I will do test trades using a micro or two. Okay. Oh, the clock on my system. Yeah, why doesn't it show on that screen? Yeah, it only shows on one screen. No, it does. Yeah, it does. It says 7:51. I've got the countdown timer on. Like I've got two computers, and I've got one running the stream and then one showing it, and I'm showing about a 5 to 3 second delay. So did you see that trade I took? If I had stayed short, right, I was short 75 and a quarter. That's the look above and fail. Did everybody catch that? Did everybody understand the reasoning, the business reason behind that trade? Okay. You look above and fail 76 and a quarter, the sellers start to compete. You sell, you put your stop above 76 and three quarter, 77, right? So your risk is tight, right? Now I covered a little too early because I'm flapping my gums and worried about the delay. So I'm not trading, I'm not concentrating as much as I should. So had I held that trade a little longer, I'd be looking to cover 72, 71, right? I'd definitely be out by 70. So 3 to 5 points, couple of contracts, you make a living, right? Now I tested it on micro because all my first trades in the morning are on the micro because I want to see if my brain is working. If my brain is working, I don't feel like losing $300 or $400, right? I really am averse to losing lots of money unnecessarily. I understand in business there are expenses, and those are when you get stopped out. But there's no reason to pay crazy business expenses, right? You have to be smart about things, right? I always want to test and see whether my brain is working. That's why I'll always use the micro when I start. If I'm testing a new trading strategy, I will use the micro, right? The only thing ego gets you in this business is a ride on the bus. That's if you still have bus fare. Thanks, Phil. No problem, Dave. No problem. So I don't think we've put in our low yet. Now, I closed my short. I have no intention of going long. Maybe if we do a look below and fail at 55, 61 and a quarter, I might think about a long, right? And so how these balance zones work is balance times two. This is the times two discount zone. Then it's the times four. Okay. The math is very simple. Like I say, without insulting anyone, it's hillbilly math. And some of my best friends are hillbillies, so I'm not insulting anyone, right? 2, 4, 8, 16. Life is simple, right? Same to the upside, right? Very simple. And what this does, it's just commerce. So it gives you an idea of the profit and loss zones for the wholesale. Wholesale is the market. This way, if it gets down to 55.30, we're not looking for a short. We're looking for a look below and fail. Similarly here, if we're in the 2 times discount zone, you don't want to be shorting at the bottom of the discount zone. That's how you get trapped in the hole, right? If we get to 55.61 and offer underneath, then of course you could short it down to 53 and put your stop at 61. This way, you have a very, very practical way of managing your risk, right? We have to manage our risk in a practical way, right? 2 to 1 and all that stuff is great, but how about letting the market tell us where to put the risk, where to put on the trade? The market will tell you from the transactions where to expect buying and where to expect selling, right? Like, say if we got back up to 55.77, I would expect a seller to be there because they sold there twice before. Why wouldn't you sell there? I know if I was selling size, I would. The execution in trading is the most frustrating thing because it's like, it's like windsurfing. As soon as you get on that board, a wave comes and knocks you off. It's very frustrating. So if we have the same procedure that we follow all the time, that procedure will keep us out of trouble. Like right now, there's no trade, right? When it's negotiating a new low or challenging the overnight low, get the hell away from there, right? That's for the large wholesale traders to figure out. This is when you get alligator arms and you don't just let them pay the money, let them figure it out. They have hundreds of millions of dollars. Why do you want to blow 300 bucks? Hello. Is it A? Yes, I always stream at 7:30 in the morning UK time for the London Open. And because of the time change, it's like 4 a.m. now in New York, but usually it's around 3 a.m. So we're gonna go forward 1 hour this Sunday. So I do 2 streams for the Micro E Futures Room. We have a stream at 7:30 in the morning, London time, and then we do a stream for an hour and a half at 9 a.m. Eastern time for the pre-market New York opening. And we're just trying this YouTube streaming thing out to kind of cast a bit of a wider net, meet some new people, have them come try out our room. Our futures room has been open now for 5 years, and I've been learning how to teach in those 5 years while learning how to trade. And my goal is to help people understand how a market works so they can trade with the business and make a living. Our trading is all about what I call blue collar trades, where you make your daily bread and then you get the hell away before they can rob you, right? Treat it like a business. So we don't do stupid things and make bad business decisions, right? There comes London. A little frisky, isn't it? So we got up to 69, and what did they do? In the business, they call that plugging the bid. Let's see if they plug it again at 69 or whether they let it breathe. Okay, we're getting some 70 prints. Okay. Oh, what a business. Crazy. Crazy, crazy, crazy. I don't know. I I'm not short biased, but I'm I'm like they got to test that overnight low. When a market's trying to find a low in price exploration, here we go. Responsive buying at 64, but I wouldn't build a house on it. I never try and catch a bottom. The only time I know where a bottom is if I'm in control of the supply of the stock and I sell it and I stop selling, then I know there's a bottom if I have all the supply. In a market like this, you can guess where the bottom is, right? There's not a lot of buying around, Phil. We have, and that's what happens when you have the margin situations that we have in this market. We have beaten the hell out of everybody over the last month. So people are a little nervous, right? But that's okay, right? They'll come back. They'll come back, right? Build it, they will come, right? That's what we used to say when we were doing deals. You build the chart, they'll come. Right now, we're having a little trouble building out that chart. We're in this 57.80 to 54.28 zone. And you notice that we're just going back and forth around that middle at 56.04, right? So just give it time. We have been used to markets doing nothing but going straight up, and what we're looking for is this pattern on a day. You know what I'm saying? We're looking for this kind of a pattern on the daily, right? Is that a poor low? Where's Raj? He's not around today. It is a poor low. So we do have buying competition down here at 63, 64 because we only have one tick of excess. So we do have a poor low. Let's see if we can move that point of control. It's only 1,150 contracts. Let's see if we can move it down here. All right. The deviations are useless as you don't want on a bull right now, Phil, right? That's why, because standard deviations in VWAP are not static references, right? That's why I like static references so I can determine the order flow at that reference. The reference itself is meaningless. It just tells me what the order flow is, right? So if the market is lifting the offer over 69, I know they don't need to sell under 69, so I know not to short it, right? If the offer is lifting, there's no reason to short the market because it's not on sale. The offer needs to be moving lower like it was here to make a good short. When the offer is lifting, you want to be long and you want to be the offer. Like, so if you bought, like say our trade setup involved a 66 long, right? You'd be wanting to sell into this now because you know that there's going to be a seller here. So you want to sell alongside, right? You always want to sell alongside, buy alongside of the smart money. The best way to find that is to look at a 1 minute candle chart. You don't need any special kind of software, right? You want to keep it simple. Just keep it simple. See, the seller was right there, right where we said the seller was going to be. There's nothing magical about this. Now, I could charge you $400 for an indicator that tells you that the seller's going to be there, but that would just be wrong. That would just be wrong, right? See, look, sellers engaged. Now they compete. They push price down. This is called a backfill, right? The market went up and it created demand. Now we go back and fill in that demand with supply because there are sellers, right? And those sellers, they need to get out of their product. They need to turn that inventory into cash, right? That's the goal of being a trader is to take inventory and turn it into cash all the way back down. I don't think that overnight low is secure. Let's go test it. It's a poor low. That poor low holds, it might hold for an hour or two. Yeah, and Phil, you're saying it looks like down and then let it breathe, down, let it breathe. That's because we have selling. So if you're a seller of size, say you've got 5,000 contracts for sale, right? You just don't want to like hit market order 5,000 contracts, right? That'd be foolish. That's where institutional traders, and now everything's done with electronic algorithms, is they need to work the order, right? So that's why you sell, sell, sell. You let it breathe. You let people think that the selling's over. They come in to buy, and then you plug them, right? You sell into that. Then you sell, sell, sell. Let it breathe. That's how you distribute size. Otherwise, because you're not the only one selling 5,000 contracts, it's not just you, right? So if you guys all dump, right, the thing goes straight down, and everyone's trained. You see, in institutional trading, to work orders, we're all trained the same way. We're not like retail. One guy's not using fibs, we're order flow traders, right? So we have an inventory and we trade that inventory against the orders that come into the market. So we're all trained to do the same thing. So when I'm selling and I see you selling, I'm going to undercut your price. That's why the offer moves down. That's why the price is going down right now. So once you get quick, you can take quick shorts if you know the seller is going to be there. You short underneath that standard deviation, put your stop above that candle, cover 69, cover a little bit at 68, cover a little bit at 67, cover on the way down. Pay yourself, right? Home runs are great, but guess what? You're not Babe Ruth, right? Make a living, right? Make a living. Get paid. You spend hours doing this, hours learning, weeks, months, years. You sacrifice time with your family. You sacrifice your mental health, your financial health. Make sure you take profits and get paid. Everybody wants to do one trade and retire, right? That's not trading, right? Trading is a job and a business, and sometimes you got to, you got to tough it out. And we found that bid there, right? So we've got bids down here. What does that mean? That means they stop selling when they get down to 55, 64. So there is competitive buying down there. So if they're buying down there, right, the sellers will stop selling and lift the offer away. You know how people say the buyers are in control? That's rubbish. The sellers are in control because they're raising price. Buyers are in control and the market's on is having a fire sale, right? And the sellers are scrambling to get rid of their product. Right? Everybody has that upside down. Buyers are never in control. Size sellers are always in control, and they regulate the price depending on the order flow that comes into the market. Order flow is just a fancy way of saying customers. That's all it is. Yeah, this job involves a lot of waiting, Phil. It's a lot of waiting. It's frustrating. You know, when everybody starts, they think it's going to be like the Beverly Hillbillies, right? Swimming pools and movie stars. Then you're sitting in front of a screen. What would be the minimum size that institutions use in their orders? They're not gonna put in orders for a single contract. I never said that, DJ Trader, right? But the software is extremely sophisticated, so it senses the order flow and reacts accordingly. The good thing is it doesn't matter what the minimum size institutions use in their orders for you to make money. That's the good thing. Now here's the thing, everyone's looking for information to give them an edge. Your edge is the way you do business, your trade setup, right? And your risk, right? It's not a bad question, DJ Trader, but the good thing is it doesn't matter. How does that make you money? Ask yourself when you're watching Twitter, when you're watching YouTube videos, how do you actually make money from the information that you're getting? Is it actionable, right? Like a lot of people will come to me and they'll ask me specifics on market making and things like that, but none of that's going to help you make money as a trader, right? The boring part is the part that makes you money. Your trade setup is how you do business. Your risk is where you manage it, right? When the trade doesn't make sense, you get out of the trade, right? So say you were short, say you're shorting 72, 73, right? If that offer starts to lift to 74, 75 and takes out that stop above 74, well, you know that the sellers see buyers and they're raising price. Why would you short a market that where the price is going higher? Does that make sense, DJ Trader? Focus on that. Sorry if I've upset you, but you always want to come around to what's actionable and like realistic information that you can use to make money, right? That's why what we do in this room is what I call blue collar trading. We want to make a buck and get out, right? Would you qualify that 30-minute low as one time framing down or not? I really don't. I wouldn't even be thinking about that right now, Phil. I'm just thinking it's holding. Remember what I said like 10 minutes ago? I said if it holds, it might hold for an hour or two because there comes a point where the sellers they see some bids underneath 63. So they're like, let's take advantage of this and raise prices. And that's exactly what's going on. Does that make sense? Yeah. Once again, DJ Trader really makes no difference to us. Are you trading? Like, here, let me put it to you this way. Like, if you're trading 500, 1,000 contracts, then the questions you're asking are a bit more valid. But if you're just trading retail, focus on your setup. Like, handle your business, right? Yeah. So if you see buyers at a certain level, you're going to walk away from those buyers and make them chase you. That's how markets work. That's how they've worked forever. It's a profit thing, right? Do we need bias, for example, going into next week? No. I have a horrible time with bias. So what I do is like I'll say I'm short biased. Okay. So if I'm short biased, I'll announce that I'm short biased, and that helps keep me it helps keep me on track because if the chart is telling me that the short bias is not working, right? Um, I've got to say that my bias is wrong. The hardest thing I ever found was trading against my bias. That's been the hardest thing. It's taken me years to figure out how to like understand my bias and then trade against it. Because a lot of the times I'll be short biased because I'm always been a seller. And then you look at this market that doesn't have supply for years and years and years, right? Why I use a 1 minute chart and not 15 seconds or 5 minutes? I like a 1 minute chart, Italian trader, because for me it works. And when I teach other people to use the 1 minute chart, despite their their protests and they think that they know better, it works for them. Because I don't know, I've never tried a 15-second chart. I find a 5 minute chart gives people too much time to get into trouble. So, you know how, what was that kids thing with the three bears, too hot, too cold, just right? I find 1 minute a nice time frame. It's manageable. Does that make sense? We're doing the cost basis for the European session, which is a time in which we should not have anything to do until it is more developed. Ah, great question. It happens to do with my setup. So, DJ Trader, if we did the look above and fail, that's a short for me. The look below and fail is a long. So it really has nothing to do with the time. Now, if you're a larger trader, which from the sounds of it, you'd suspect that you trade large quantity. If you're building a position here, right, I would wait for the point of control to move down to show good absorption, number one. And if you're building a position between 64 and 74, well, what I would do, well, that just showed me right now. Look at that. We fixed the poor low, right? Obviously, a large order came in and just dropped the market. Could be news related, who cares? Do we do a look below and fail, or do we accept under 61, right? So if you were building a position here and the market started taking out these lows, you'd start scaling out of it, right? And you have to have the account to do that. I would caution against building a position till later, right? And I would let the chart tell me, right? The story is I started out, the reason I do these micro balance levels, Italian trader, is I have a friend of mine, he's a really good guy, and he's quite a good trader, but he's a horrible, horrible risk manager, right? Just absolutely horrible. So he'll make like 2 to 3 grand in a day and then he'll lose four at the end of the day. So I came up with this over years of working with him to try and get him to be able to manage risk. And we started out on 5 minutes, but I found that he would get into way too much trouble in a 5 minute time frame. 5 minutes is a lot in a market. So that's why we worked on the 1 minute. And then once I start seeing results, I started teaching it in the room. I'm looking to see if we hold 61, right? If we hold 61, we can go long, but look at this, the sellers, right, are right here. So if you're long down here, you know there's a seller at 66, right? So make sure you get out. I pick some up at 3. I'm out at 4 3/4. I'm flat. Just a quick in and out, right? Look below, fail, it holds, you go long, and you make sure you sell into the strength because the inventory is above us, right? So that's why I came up with that and that we worked on it and worked on it and worked on it and refined it to a 1 minute because you can't get into too much trouble in 1 minute. Had I gone long here in the 63, 64 area and it started taking out the bottom of that candle, goodbye, I'm gone. It teaches you to think and react quickly. The problem with traders is that they get lulled into this complacency where they want to take a trade and make 30 points and hold a trade for 2, 3 hours. But in that time frame, because they don't have any skill, they can get into so much trouble. So while I know a lot of people don't have time to scalp, but I think scalping, and I'm assured of this from my experience, is you got to know how to think quick. Because if you can't think quickly and execute quickly, you're going to hold bad trades longer and you're going to lose more money. And I think everyone's gone through that when you go through a period where you're in a bad trade and you hold on to it too long, right? The longer you hold it, the more you lose. We all know that, right? So get out quick. Get out, get out, get out. Train yourself to be fast, right? Because you can use that skill when you trade longer time frames. You still need the ability to think quick, right? And in a market like this, if you're complacent and you're slow, you are going to get destroyed, right? Build your skills, my friends. Build your skills, right? And this is coming from experience, right? Build your skills, build your risk management because your risk management will allow you to trade tomorrow. The reason I am so cautious is because I've got 33 years in the business. I have seen brokerage firms fail. I have seen clearing firms fail because some idiot, right, takes on too much risk and blows up the brokerage firm. You know what happens when a brokerage firm blows up? Like when you guys blow up your accounts, no big deal. When a brokerage firm blows up, people lose their jobs. It's not how many ticks, DJ Trader, it's the structure. So if I was long here and the market takes out 61 and a quarter, right? I know the business reason for the trade, which is that supply is limited under 64, is gone. Does that make sense? I was high here because the market was fast, right? In a perfect world, in a slower market, you can buy 62, 63 against 61 and a quarter. Once the business reason for the trade does not make sense, once the business reason is not supported by the order flow, then you must exit the trade. Does that make sense? If the market is jumpy and volatile, you're going to have to use a larger stop. If it's a slow and creepy market, you'll get away with using a smaller stop, and therefore your business expenses will be less. Hope that makes sense. Right? I know a lot of people have been schooled in this X and this and this and that, but you have to adapt your risk management to the market conditions. Hope that makes sense. Right? Like you're a business person. What are the market conditions? You go to work, you're selling hats. Does anybody want to buy a hat? You're selling umbrellas. It's sunny outside. You're selling sunglasses. It's raining cats and dogs. You have to adapt, right? It's a business. Hope that makes sense. Once the business reason for the trade is gone, so are you and your capital. And that's how you survive this business. Yeah. So when brokerage firms and clearing firms go bust, 150, 200 people lose their job. That's why risk management has been ingrained in me. You know, I've, I've seen bad things happen. We were doing a short squeeze once and we took the stock from $3 to 25. The CEO said something really stupid in a news release. The SEC halted the stock and one of my friends took their life because he had put so many people into the stock, he couldn't face them. That's real world stuff. So that makes you risk averse, right? That's real world stuff. So when I talk about this stuff, it comes from experience. I'm not some guy who used to be a waiter who's now teaching people how to trade, right? I've seen bad things happen. That's why, and I talk to nothing but people who lose money. So I'm trying to keep people away from the pain of making bad business decisions, right? And I hope it works. Let's see if we can clear out the 72s, right? A look below and fail of 61 and a quarter, right? The theory is if you look below and fail 61 and a quarter, you'll rotate up to 76. But we've got sellers here, and we are going to have sellers at 74. So right now, if I came and I started looking at the market right now, I would draw my balance zone would be here. Now, I draw everything by hand. Hello? As you can just see, I just did. I don't like to automate things because it makes you mentally lazy. I like to walk through the market every day, pick out my levels, draw stuff out. Like I want to be in tune with the market. When you automate things, you become mentally lazy. Does that make sense? Yeah, you can extend the triangles. I mean, the rectangles, sorry, right? You just click that and click extend drawing, right? But see, we have a rotation now. We have a rotation from 64 to 74, right? Really simple, right? And then you take that and you double it, right? So if this is your balance, right? I always use blue for balance. And then you just double it and you can get a sense of where your target's going to be, right? So this is the balance. If we break above 76 and hold 77, then and you're long, you know to sell some at the 83s, right? Because VWAP is right there at 86. They're going to front run that. Does that make sense? This is really simple. The reason why a lot of people have trouble with this is because it is simple, right? How do you, Fancy Ballers, you're in the room, right? You DM'd me yesterday, didn't you? Yeah, just hang out with us in the room, right? I also have a one-on-one coaching program for people who want to sort of accelerate their learning, right? And it's lifetime coaching. So unlike most courses and programs where you pay a fee, I sell you something and go away, um, it's lifetime one-on-one mentoring. So, if you need an hour today, great. If you need an hour tomorrow, we do a Zoom, just you and me. So that is available. And it's basically I haunt you until you're profitable. Yeah. So just DM me in the room, Fancy Ballers, and we'll chat. And thank you everyone for joining me. Come visit us at microefutures.com. We do have a 7-day free trial. Come check it out. I promise you, you'll learn more in 7 days than in anywhere else, and it'll be practical, simple information without all the mumbo jumbo, right? And DM me when you get in the room. I love talking to people. And if anybody wants to do a one-on-one session, um, I'll do a free one-on-one session for anyone who's interested in long-term coaching. Thanks everyone for joining us. Have a wonderful, wonderful morning. Stay out of trouble. And if you can't stay out of trouble, don't get caught. We'll see you guys in RTH. Thanks. Hello. Have a good one. We'll see you, everyone. Be safe out there, okay? Bye for now.